Welcome to CFTC Talks. I'm your host, Andy Bush, Chief Market Intelligence Officer for the CFTC. Hey, just a quick reminder, as always, there's a disclaimer at the end of the show that's important for you to hear. As well, for today, the views expressed by our guest are her own and not of the World Bank. Hey, a few weeks back, as most of you know, the CFTC held its first ever FinTech conference at our offices in DC, and it really was a lot of fun. I know I learned a lot. I know the people that participated shared a tremendous amount of information in this space. So if you get a chance, go to our website, cftc.gov, and check it out. Now, one of the people who attended and participated on a panel is our guest today. Sharmista Appaya is a senior financial sector expert in the Finance, Competitiveness and Innovation global practice at the World Bank Group and focuses on the World Bank's engagement on fintech issues as they relate to and can have an effect on financial inclusion and financial sector development. Most recently, she was the head of the Fintech Accelerator at the Bank of England in London, and they were looking at innovative firms and technologies to understand both the applications of and implications on central bank practices. Sharmista, welcome to CFTC Talks.
Thank you, Andy. Good to be here.
Hey, before we jump into the World Bank and all of that, maybe we could just start out simply with your background. Like where did you start? How did your career progress to where you are today? How did you get into fintech and all of that?
That's quite an interesting question, actually, because I didn't actually start in finance or technology, for that matter.
No, really?
I have a background in engineering and biotechnology, and then I did a master's in neuroscience and sort of spent most of my time looking at images of people's brains and looking at why they light up for certain things, which is quite interesting actually now because I've come almost a full circle where I'm looking at behavioral studies and trying to understand why people make certain decisions. So it sort of all fits together. But I first entered finance because I didn't understand the world and it was much more of this was a challenge and I wanted to understand how it worked, how policies worked, how governments coordinated together. And it's been quite a journey since then. And I've spent the last, 7 years before I joined the World Bank at the Bank of England looking at exactly these issues.
Well, I love the fact that you studied brains. It's part of one thing that I do here, believe it or not, to help people communicate is help them with storytelling because storytelling lights up about 16 parts of your brain versus just reading stuff. So I love that that's your background. And I think it's really important for people to understand that. But I guess, getting back into your career a little bit, like what were the lessons that you learned from your experiences in fintech right before you joined the World Bank?
So working in fintech at a central bank was a really interesting experience. A lot of it was about breaking down silos and changing the way people thought, which is a lot of what fintech is today. It's about changing the status quo and changing how we look at the financial services value chain as it currently stands and says, can we do this better and can we do this differently? So some of the things we learned was that fintech is an enabler, so we can enable it, use it to enable different methodologies, different ways of working. Another lesson that was quite important for us right at the beginning was that there was no one-size-fits-all. There wasn't a single answer to everything. And something else that was quite pertinent initially when we were looking at the work we did was that we should always find a problem and then use fintech as a solution for it, and not sort of the other way around, which has been quite often the case as you look at sort of trends that have been going across globally. Internally, what we were trying to do at the bank, especially, and what we're trying to do at the World Bank and the Bank of England, has been to almost act as a catalyst to get people to think differently. I think sometimes we're saying we don't have all the answers, but if everyone works together, then there's a certain way that we can catalyze action and change the way that we do things as they currently stand to achieve greater outcomes.
Yeah, and I think that's really important. I mean, too often, here in each individual country, well, especially here in the United States, we think about the problems that we have and how fintech can solve them, but we have no idea what the rest of the world is doing, and they may be trying to solve very different problems with financial technology than we are here. And I think that's what, to me, is really exciting about it. So I think what a fascinating background to get you into where you are today, which is what I want to ask you about. So provide some context before we jump into that, because I think it's a lot of people can get confused about the World Bank, myself included. So I guess let's level set the audience a little bit. What is the World Bank? What is its mission, and how do you fit into that?
Sure, of course. So the World Bank, as you might know, was set up in the 1940s. So this was just after World War II. And the main reason it was set up was to rebuild countries and to give them loans to actually build up all the destruction and devastation that had happened. But over the years, it shifted from reconstruction to development. So a lot more of the work became about infrastructure, about building bridges, about building dams, things like that. Today, we have two main shared goals of the World Bank. One is to increase shared prosperity, and the second is to reduce poverty. And using those two goals is the thread that goes through all of the work that we do. Today, we have 189 member countries, and we have offices in over 130 locations, which gives you a sense of just how wide the span is of the work that we do. We mainly work by giving financial products, so in terms of loans, in interest-free credits, in grants to different countries and jurisdictions. And we also give a lot of technical assistance and capacity building. So we help countries write laws, we help them develop programs, we help them implement those programs, and quite often the work that we do with a number of different partners. In terms of how it's structured, quite very quickly, it's almost like a matrix structure. We're organized into global practices, which are based on, say, health, agriculture, transport, and finance, which is the area that I sit in, and I'll talk a little bit more about that. And then across them, which are certain themes that tap into all of those different global practices, are areas such as climate change and gender that influence all the work that we do across all those GPs.
Go ahead. I was just going to say, okay, so that's awesome. And I didn't realize those were the two driving principles of the World Bank, although I was aware of some of the other activities that you had. But how do you fit in? How does finance fit into that mission?
So I work in a global team. By that I mean it has a global reach, and I don't work on only specific countries. And the team is specifically called Financial Access, Inclusion, and Infrastructure. And we work on a number of different areas. So some of them is increasing responsible financial access and consumer protection. So how do we protect consumers? How do we get governments to think more about their consumers? The other area is about payment systems and infrastructure. So it's about building the central ledger platforms, helping countries develop e-money regulations, helping them with crowdfunding regulations, so anything new that they will need to do at a very regulatory policy-making level. And the other area that we've been working quite a bit on recently is credit. As you might know, it's quite difficult for people, especially in developing worlds, to have a good credit score. So we've been using lots of fintech areas and things like big data to try and understand how we can actually help them develop credit, different credit scores in order to get access to things like loans or savings and other areas like that. So where I come in is that I sit across all the different teams and work with all of them on where their work interacts with fintech. So that could be anything from any of the new risks that are arising out of consumer protection, helping jurisdictions think about sandboxes or any other different regulations that they might be thinking about, and also helping them develop models and tools and environments for of big data and different ways of collateral management. I hope that's clear, and happy to clarify anything that it isn't.
Well, let me ask you this. Since you brought up Sandboxes. Maybe you could just take a minute and kind of explain for our audience, from your perspective, what that is and why and how regulators are utilizing that.
Sure, of course. So because fintech has been sort of gone through such a rapid and fast pace, and quite often, as we always feel, is that innovation tends to forerun regulation. What regulators want to do is not just follow it, but keep up with it and also enable the environment for fintech. So they want to work with the industry as opposed to being on two different sides of the coin. So they've created something called a regulatory sandbox, which actually I think the first concept of it was came up in America with the CFPB and Project Catalyst, but it has been actually taken to scale with the FCA sandbox, and all the different jurisdictions have sandboxes that are slightly different, but the basic premise is that it gives you a test environment. So the word sandbox actually comes from the IT testing as opposed to the child's playpen, which a lot of people confuse it with.
Thank you for clarifying that. Now I know how to explain it a little bit better.
Yeah, you're most welcome. And so it is a test environment to help firms that have ideas to scale. So in quite a few jurisdictions, in order to work in a market environment, they actually need to have a full license. And a full license costs money. It requires a number of different compliance procedures. The sandbox reduces that. So it gives the regulator access to these firms to understand them and to assess the risk better, so they're not being allowed into the environment completely unfettered. And it also gives the firms that ability to have that ongoing dialogue with the regulator and understand whether their product is feasible or not, and whether customers are willing to take up that product and if it has legs. So, for example, certain sandboxes will develop test environments tests for firms, which might mean that they're only allowed to work in, say, one state and only allowed to have, say, 500 customers and can only give loans up to, say, $500. So it's all quite defined in how much they can and can't do. And this allows them to function, but allows them to function within the remits that are comfortable to the regulator and comfortable to them. So it's beneficial for both parties.
You know what I think is so exciting about that is the fact that I love it when governments or supernatural agencies like the World Bank work with the private sector to affect outcomes that benefit everyone, including not only the firm that's working there, but really by doing that, you hopefully enable a better digital technology environment for the country or entity that you're dealing with. But then also because of that, you're hopefully creating jobs through this and you're reducing costs to that firm of spending time with lawyers or trying to, go through the regulatory process, which can be slow
absolutely.
and cumbersome, right? And I think that's what a lot of people forget, that there is some really great work being done by the World Bank and other entities like the Bank of England, the CFTC and so on, in this space. And I think for me, somebody just kind of new into government, this is what I love when I discover this stuff. And I would imagine it gets you excited too.
Very much so. So it's amazing the kind of work that we could do or the kind of reach that we can have. And quite often, fintech almost seems like a startup environment within these wider organizations. Mm-hmm. And it seems like a lot of the tone is actually coming from the top. Our president, the governor, the Bank of England, everyone is very keen on it and are looking at this as ways of how we can increase our reach and how we can increase efficiency. I think the first time this was fully recognized was with M-Pesa and mobile banking. The way that mobile banking has changed the outlook and has how increased financial inclusion in the way we measure it has been absolutely phenomenal. So one of the big projects that we work on at the World Bank is called Universal Financial Access. And we have a goal that by 2020, we want 1 billion people to have access, 1 billion more people to have access to the financial system who are currently unbanked. So the number used to be about 2 billion, and the latest Findex results, and Findex is a study that we do that's a very vast study that goes across a number of countries and looks at how people use transaction accounts and whether they use online banking and online digital payments, has seen that currently there's 1.7 billion people who are financially excluded. And so we have a view that by 2020, we will actually get 1 billion people into the financial system.
That is
a key
so cool.
way to do this,
Go ahead,
a key
sorry.
way to do this, I was going to say, was by fintech. So we are looking at fintech as a key enabler in how we can actually get this to work.
Yeah, it's amazing what leadership can do, right? And a goal like that. I mean, it seems like a crazy big goal, but actually, what you're doing to get there is really, as you said, it's wonderfully enabling for the people that are unbanked. And I think that, looking outside of the United States and outside of some of the developed world, that's really the promise to be able to bring those people in, and then all of the benefits that can come from that, all of the job growth, all of the economic growth, all of the lifting up of people from poverty fits right into what the World Bank's mission is. So that's really neat. Well, let me let me move away a little bit from that, because at your recent annual meetings in Bali, Indonesia, the IMF and the World Bank group together launched a set of 12 policy elements aimed at helping member countries consider their approach to fintech in kind of in this vein. So what was done, and why bring out these very specific, or not very specific, but these 12 policy elements?
Oh, of course. So this is something that we did with the IMF, and it arose out of the fact that a number of our members were asking for support on these emerging risks and opportunities. They were also asking for international coordination. So it was a reaction to what our members were asking for. And I think when we looked at sort of the environment that exists, there wasn't a holistic framework to look at all the fintech issues that existed and how to facilitate cooperation between industry and regulators. So that was sort of where the idea for developing these Bali elements came up. So the way we looked at it is that we divided them into 4 broad areas. One was to foster an enabling environment, and so we can harness opportunities. The second was to strengthen the current financial sector and policy framework. The third was to address the risks and improve resilience. And the fourth was to promote international collaboration. And then we have various subparts within that, which include things like increasing competition, opening it up for free markets, increasing financial inclusion, modernizing legal and regulatory frameworks, ensuring stability of the monetary and financial systems, and also increasing and developing sort of a robust data infrastructure. So there's a number of there's very specific reasons why we chose those elements and how we think those elements are going to develop. But it was almost to give countries that we were working with a base to say, okay, this is this new thing that we're looking at. How do we start thinking about it? And how do we look at whether our policies are fit for purpose? And what else do we need to do with it? So it was almost to help them. It's like a tool to help them develop their understanding and their policy framework for it. And I think what we were trying to achieve with it was to say we're going to keep this broad enough that governments can be nimble and change it to suit their needs, but specific enough that they know that these are the main areas that they need to cover.
Right. And just for our audience, just so you know, you can just Google the Bali FinTech Agenda Chapeau paper, and you can get the whole kind of outline of what Sharmista was just talking about, if you want to dive into it a little bit deeper. But let me ask you this, because this is always fun. It's like, as Mike Tyson says, everybody has a plan until they get punched in the face. So I guess my question to you is, what are the next steps? Like, how are you going to execute this? What are the next steps here?
It's a good question. So I guess maybe what we were trying to get at initially was that because it wasn't policy advice, what we were trying to do is more like framing the issues. So framing, right. This is what the world currently looks at, and these are the areas that we need to focus on. So in terms of next steps, what we are going to do is enable reforms. So, for example, in Colombia, we've just helped them write a new crowdfunding policy. And do some capacity building. So so another example is that in certain countries, in certain South American countries, actually, with the IFC, have developed something called DigiLabs, which almost looks at how it's a 6-week program that private sector companies can sort of attend, and it helps them understand what the fintech environment looks like and how to actually develop a digital strategy. The other thing that we're trying to do is adopt solutions. So use things like DLT for solutions. So I think one of the examples that I quite like to use, because it's quite a feel-good example, is that we were trying to use DLT in Vietnam to actually remove intermediaries in the coffee value chain. So to get from suppliers or to get from the growers to the suppliers and distributors, we try to remove as many intermediaries as possible, so that the cost, the price that the growers got was much more than they initially had, because they had to pay so many people off for to be parts of that value chain. So these are sort of little pilots that we're doing. Another pilot that we're doing is trying to use blockchain and the DLT platform to look at how remittances and cross-border movement of money works. So these are all still in pilot stages, and none of them have been fully rolled out. But one example that we have rolled out is in Ethiopia, where there was quite a significant issue of women being unable to get loans because they didn't have any collateral. So I don't know if you know this, but in most developing countries, most of the houses, which tend to serve as collateral, tend to be in the names of the men. So women have very little in their name that they could put down as collateral. So we worked with a company to develop a credit line and a solution which was based on psychometric testing, and we worked with some private sector providers there. And based on the results of the psychometric testing, the women were allowed different loan values. So it was a very, very interesting study, and it's been rolled out to over 3,000 people now, and a number of microfinance institutions are actually taking this on board and using this to give women loans. And we found that in the results from it, that the people who scored much better in psychometric testing are 7 times more likely to pay back a loan than those that didn't score so well. So it's all these little examples of using technology to enable sort of the bigger picture of financial inclusion and access.
Yeah, and what I like about that so much is that it's not just having the outline or plan. That's really critical. But then actually going through and having the projects to back it up and to test these things, I think is so critical. Just really quickly, talk just a little bit about the process of the psychometric testing, because I've not heard that before. Could just briefly kind of talk about what that was like and how that got you to the finish line to get some comfortability with getting loans to these women.
So it was over a process of, I'd say, over 2 years that the work was developed. And initially we had sort of a very specific idea of what we wanted to do and how we wanted to do it. But a lot of it also depends on finding the right partners, finding the right private sector and other development partners to work with. So we developed this test with Lendo, which is one of the providers in Ethiopia, and it was a test that lasted about maybe 10, 15 minutes, and it had different variations. So it's quite similar to those tests. I don't know if you've done some of those tests that you do before a job interview. That as you get some of the questions right, the questions get harder, and as you get them wrong, they get easier. So it's almost like a scoring mechanism that has good and bad, and obviously a lot of it is based on research, and not. I'm not going to say that there's a hard and fast rule for what works and what doesn't,
Sure.
But a lot of this is based on research and things that have done. And I think we worked with some academics, we worked with private sector to sort of develop this, and then we worked with people as well, because a number of the people that that we met are numerate, but they're not literate. So we had to sort of design the test to actually make sure that they could be taken by people who were not literate. So it didn't have too much reading on it. It was more about numbers and more about shapes and things like that. So it's a lot more logical. It's a lot more of it is about memory, and there are certain parallels that are drawn between sort of memory and logic and your propensity to repay. So there are some studies here which I think I can send you after the call.
Oh, that sounds great. Yeah, wow, that is fascinating. And for the record, I would never get a loan if I had to go through the process, just to be clear for the audience.
That's really interesting. At how difficult they were, actually.
No, I think that is so interesting because it so often we're faced with challenges and problems that we have a set of metrics in our mind and methodologies that we utilize to get over those. And sometimes we're faced with something that you're like, there's no way I can solve this problem, or we can't do something, but you found a way around that. And I think having that flexible mindset is just so important for solving these bigger issues like poverty. And I think that's wonderful. Well, we just have a little bit of time left. So let me ask you this. Let me just bring it to the future. And we've gone through a lot of the questions I had just talking, so that's really great. But before I let you go, what are going to be the top 3 areas that you're going to focus on in the next 12 months?
Sure. So one of the areas that I'm particularly interested in is using DLT for remittances. I don't know if you know some of the stats on remittances, but it's very, very expensive for, say, me sitting in America to transfer money to, say, my parents in India. Mm-hmm. So there is a number of different ways, and that firms are coming up with ideas. A lot of them use virtual currencies and crypto assets to do it, and that's something that we're not fully on board with just yet. I mean, it's an area we're exploring. But if we could actually find a way to use a DLT system to use for cross-border remittances so that people don't have to sort of give their money to a bus driver and the bus driver drives 20 kilometers and finds someone's parent or grandmother to give the money to, I mean, that would be amazing. The other area I'm working quite a bit on is digital ID. So digital ID is a key enabling factor for people to get access, mainly because for know your customer purposes, people can't actually open a bank account without proving who they are. So getting a digital ID is vitally important, and that's some of the work that we're actually doing with the G20, and we're running out certain pilots in different countries to see how we can actually get biometrically enabled digital ID. And the third area that I would probably focus on is capacity building. So while a lot of them are exciting and these new technologies, some of it also starts from the basic root of it. And it's about teaching governments and teaching regulators about what they are and what they need to think about. So I think over the course of the next year, I hope to focus a lot more on developing that knowledge and disseminating that knowledge into different developing markets.
All right, World Bank Sharmista Appaya, thank you for coming on the show today. This has been great.
Thank you, Andy.
That's a wrap for me this week. Thanks for listening. We'll be back soon with more great guests. I'm Andy Bush, Chief Market Intelligence Officer for the CFTC. Thanks for listening. This has been CFTC Talks. But wait, we're not done yet. It's time for a disclaimer. The CFTC is providing this information as a public service, and it is neither a legal interpretation nor a statement of CFTC policy. Reference to any specific product, service, trademark, manufacturer, or service provider does not constitute an endorsement or recommendation by the CFTC. The CFTC is not liable to any consumer or any third party for any direct, indirect, incidental, consequential, special, or exemplary damages or lost profit related to the use of the information provided or referenced in this podcast. Selection of guests on the podcast does not imply an endorsement of any particular individual or entity. Many individuals and entities provide similar services to those of the guest. The views and opinions expressed by the guests in the podcast are their own and not specifically endorsed by the CFTC. Moreover, the information provided in this podcast should not be construed as investment advice. Consumers should rely on their own inquiries as to accuracy and relevance of the information incorporated or referenced in this podcast and assume the entire risk related to its use. The CFTC is providing its interpretation of market trends solely to inform the public of a framework for projecting possible outcomes under different scenarios. If you have any questions concerning the meaning or application of a particular law or rule administered by the CFTC, please consult an attorney.